Good morning, happy people. My name is Jay Song. Everything in this video is never financial investment or trading advice of any kind. Everything's just for entertainment, educational, and comedic purposes only. I eat red crayons for breakfast. Trading the markets carries substantial risk. Never trade more than you can afford to lose, and especially be aware against high leverage trading. Past performance is never indicative of future performance. And remember, we have a time change in the United States. That means that dive will be an hour later for a few months. All right, USDT.D, often remember when this chart goes up, your cryptos come down. When this chart comes down, your cryptos go up. It gives us a good idea of what's happening in the markets. As we find out as we understand what important changes happen in the market, it lets us know the direction of the market. In this case, we talked about this for quite some time. This parabolic line was very important. It gave us a resistance here at this red area, and that red area was approximately 4.69%. So we've had this area for quite some time. And as we broke out, especially on pushing volume, and we came down and sat down on this area right here, we can see what was going on. We were building in this area. We quickly hit our first target that day here. We also hit a long time resistance, which is part of a larger flat that is happening. It's this one in pink here. Okay, that flat. The other thing it hit was the larger parabolic here in this area, which is also still active. To me, I also observed the foundational area, which is this in white, and these are all the larger important areas on our chart. Some expected areas we're looking to do is we're looking for the game to change after we build primarily above the upper regions of 6.82 and 6.33. If we build above there, then the market's going to crash, and we'll be looking for something very negative to happen in the market. Until then, I'm still very optimistic about hitting 3.78 and primarily this area right here in white of 4.88 and 4.71, and going up along the curve, and also being underneath this pink line because I saw it in a vision sometime in the future. We're here. The problem with those two areas is we are still not in play with those areas. They become in play once we achieve weakness, which is price moving underneath this pink line. So once we get some closes below there, those will be active. And the other thing is that we now have this uptrend that has formed over the last many months. Here's December 2024, January 2025, July, August, and September, and also, two times in August, September and October. So this uptrend line right here is very important and powerful. So you guys know that the next weakness that will need to be achieved is going to be also below this line. So if we get some strength and weakness below this line, that's going to trigger. And then here's the next trigger, 4.221. So 4.34, 4.22. These are where these weaknesses will trigger these down moves. And then the other weakness is this one right here. So 3 weaknesses to trigger that final move. I think we're going to get a bounce here, and then later on, because I saw we go up on a curve, I'm going to be looking to come down, and that's going to be a very beautiful time for the market. Unfortunately, since this is the up move, and we are now across this parabolic in blue, that is telling us we need to be more likely playing here. Now also, when we looked at the volume of this chart, we saw that the volume was indicating higher at the upper challenges. That tells us with a higher degree of certainty we should be gravitating upward. So we saw this on the daily chart. This is why I put in the reports that I'm expecting bearishness in the market. So publicly I did a report. The other thing we were waiting for was price to come down and build upon this area, and that area was 4.69, and that's exactly what's happened. We came back down and again build upon that area, that initial track where we broke. We built upon it once, we built upon it twice, and this is the arrow that I drew for you. This is the symbol I drew that we're looking to come down and come here. So all of that is being fulfilled in real time over the last weeks. Now, when this chart goes up, your cryptos are going down. When this chart is going up, generally the market is gravitating towards weakness. So we can see at these upper challenges, 1, 2, 3, 4, these 4 challenges now, the volume is still relatively high, except for at this last challenge here, October 25th. So Here we have October 17th and October 19th, the volume's still high, so we still have every reason to come here. The move down, I wasn't looking for that to be the bull run, I was just looking for that to be a bullish day or a bullish week. And then here we're going to be looking to reject. This is what we're now seeing in the volume. The last thing we see is the volume starting to churn in the right direction. So that's a good thing. Again, the targets are all hit, so we will only be looking for price to build on these targets, 4.97 and then the 5.34, 5.25. So if you're looking more micro lead for price to build, what we're going to be looking now is price to build above this flat, price to build above this target, and then prices to hit 5.71, which is the conservative number, and the more liberal number is going to be this wick match up here where the green dot is close to. So there's going to be a price right here, and I'll place it at this time so you guys can see it. I said this is going to be a bearish move for crypto, exclamation mark. So if we see this move, which we are seeing in real time from our number 4.74, we are going to be looking for things to get bearish. All right. Do I have any other questions? My synopsis for this number, for 6.04 and 5.71. October 18th, a significant close above 5.5% should indicate bearish markets for crypto. Above 5.71 is also important close. After this, look for 6.282 average. Dynamic negative. 6.82 is going to be up here. So these are going to be important areas, and then the 5.71 important area. All right. Questions going once?
Can we zoom out and see if there's any possibility that's not going to be the scenario from the previous happenings? So are you thinking this is going to take like all of November, or it can happen pretty quick?
The average spread lets us know that information. Let's measure it. Okay, we'll use a highlighter. We're going to take about the average spread, which is going to be about from here to here. Do we agree this is about the average spread? The average trading range for a 2-week span, and sometimes in one case is 1 week. Is this okay? Sometimes larger, sometimes bigger? What do you think, guys?
Yeah, that's about right.
If so, how many weeks can it take from the average of these weeks, which is about right here, which is where I'm about to draw a close? How long could it take, approximately?
5 days.
5 days. Michelle?
I just said a week.
It's possible we can hit a conservative number in a week. Give me a really bad week, it can happen almost in a single week. So I would say it's possible over November. Double checking my information, and I'll write this down here so you guys can have a record of my answer. And then I'll give you another two pieces of important information. Based on the average spread, it's a candle, okay, it is possible to finish hitting the 5.71 in a week. But this also may take longer. So if the candles decide to go in a different direction back here first, we can really fill that up. So the earliest is this month, maybe a week. It is likely in November. And I'll put the date. November 3rd. Okay. The other thing I want to let you guys know is, Lisa asked me, can you zoom out, Jae-Sung? Is it possible you're wrong? Of course it's possible I'm wrong, of course. But one of the things I'm seeing also along this track is, in addition to this straight parabolic here, we have a wick that's about here. And this stresses the downside of a parabolic this way. Yes, there's parabolics this way, which are encompassing these, but a parabolic this way is going to miss this one and this one, right? If I draw the parabolic like I have in yellow, this one is going to miss these two. Do you guys understand that? I'll show my lines again. This yellow one, curvature does not hit here and here. Maybe there's 4 really, as I'm looking this a little bit closer. Okay? So that puts resistance in at this whole area where they level out. You guys got that part first, right? Okay, we're gauging the flow of the oscillation with a high degree of certainty, as we've gauged oscillations for several years using key angles and phantoms. Okay? But what I'm showing you right now is that the curvature that more resembles this way, highlighted by this phantom, representing this oscillation, is also just as important, if not more, because it's more encompassing right now. Now you're saying, Jae-sung, how is it more important if we broke out? They tell a similar story. Right now, this is telling us this is an important territory for bullishness for this crypto. Again, if this is bullish on the larger story, even more larger, then what does that mean for cryptocurrency? So the territory, what I'm getting at is that the territory for this cryptocurrency is really, should be bullish, right? So we saw it in the volume. We saw it in the smaller breakouts, those smaller parabolics here. We saw it there. We see it in the structure. How can we deny what we're seeing with our own eyes? Our own eyes are telling us we should be gravitating here, and we should be finding resistance here. But the other thing we see now is price trying to get a close above here. Now, what's the problem with this candle and this close? The problem is we still really haven't closed above this oscillation, but we're starting to. That makes sense? So this one in pink turns out to be somewhat important of a close. The problem is, I don't know if I'm going to read this as a close, because remember, you got to give yourself a margin of error with parabolics. Parabolics, your deviation can be off a little higher or lower. So if I didn't draw it correctly, a hair, it's wrong. So I give myself a more wide berth of error. And you should too with your parabolics. At any rate, what it's telling us here is that we should be playing up. Straights, in health, delay, all of that's done. Health that broke out above here, above the yellow one, that one's done as well. So that one's really all done. I'll still leave that one on the board because it's just, we're not so far away from that. This is the next health. This close is important for the parabolic. It's important for the little target. And it's important for one more reason, and I'll show that to you guys in just a moment. So the more I look at it, the more I'm, just like I tell you guys, the more I look at Bitcoin, the more bearish I am, down to 99, 95, possibly even the 80s, if we can show more signs of weakness. This is why I feel the way I do about the markets. They line up, they match, this data matches. So this breakout could see us hitting the resistances here, the straight here. If they break out of 6.2, where does it go? Just a little trivia for you guys. You guys know this answer. You're pretty good at it. If it goes here, there's 2 areas where it goes. We break out above 6.2, which is the straight here. Where do we go? There's 2 areas. Quite simple. Can you guys draw it on my chart? We'll put it on the board right now just in case we need it for nefarious purpose.
Yeah.
You got it, Alex?
6.2. You're saying if we break out of what?
Above 6.2, we start going real bullish, right? Then we're in crash territory. We start really looking for stuff.
Yes, I agree with iPad. He or she beat me to the punch. I would have said the flat or the DP.
Good. iPad got it. He's got the flat here. How many hit it? How many times we hit it? 1, 2, possibly 3, and 4. That's important to draw. Now, I don't place everything on my map, but you guys can, and you know how to build maps. This is important. There's going to be our flat. We hit it 1, 2, 3, 4, possibly 5, the range. I'm going to bring it down for the core. The core on the weekly chart is about here. Here's about a core. We're hitting a little above, a little below, but that's approximately the range. So the range will be MTF, multi-touch flat, 8.75, 8.19. somewhere between there. That'll be very important to watch out for. So we're gonna put this on the label on the top, and I'll put it in the center, so you can see. If I break above here, we go to the DP. iPad got it. What the DP is we project the oscillation. So this is the oscillation that we're breaking out to the top side. All we do, it's quite simple. I'm giving away all my secrets here. We're gonna duplicate it and we're gonna place it on top. The problem is we gotta make sure that we gotta align these up so we don't bring them like this. We actually bring them straight up and down, and it triggers the same key angle. So our key angle is in the middle. This is a phantom, and this is our DP, which is also a type of phantom. And the other problem is, because we're in the future, we're gonna have to extend that out. So let's quickly do that professionally. The way I do it is I take a measuring line. We're gonna go toward somewhere on the pink line, anywhere, but you wanna go approximately straight down and measure and take your trend line, and we're gonna measure that, bring it straight to the top, and set it on approximately in the same area. If you move it to a different part, you will throw off your calculation, because sometimes you will throw off your calculation. And that's only if you draw like an angle. So if I draw like an angle like this, and then I bring it down here and I draw off, I should be throwing off my calculation. So I like to draw them as close as you can straight up, or don't move it so far to the left or to the right with parabolics. You're gonna have some margin of error, but that's the way I keep from having so much problems. Okay. You can also check yourself by making sure you're lined up straight with your other parabolics. So here this, I can see my origin point is off completely. Here's where my origin point is actually on this date right here. I drew that. So the bottom is off. So I need to make sure that this one comes straight down and clicks in place. So there's the bottom, which is not in play right now, but it's nice if we needed it. And then this one should line up there. And that's basically how we can get the best notification, get best curvature. Okay, so now we can track for a price in the sky if we need to. But you're saying, Jason, it only goes to this far. How do we track for the future? You just track the trajectory of the curve. So I can give myself another curve, which I'm just going to place it on top here and here, and I'm going to balance the curve to make sure it's in alignment with the other. Now I have an arrow on this one, so I'm going to make sure, and the color's wrong, so I'll change the color. So I'll turn off the arrow, normal. I'll take the color, and I'll turn the color back to pink. So now we have a place where they meet together. What do we call this in our art? What do we?
Vortex.
We call it a vortex. Other teachers would call it a confluence of influence. I've heard it called a few different names, but in a simplistic sense, we want to think of this, I like to call it a vortex, where we think of like a whirlpool, a place where everything meets and some action is happening. We're having resistance because of two different elements that are in the same team. This would act like a target, a psychological point where these players will take profit, and also another psychological point where these players will also take profit, because we have evidence in the past that they are taking action here. And we're going to examine the volume at those areas, and in this case we can see the sellers were out, but they won. Also, they had a strong absorption and they won, so we didn't have to come down. We don't have a strong incentive to come down to 8.51. Now DPs are not always hit. But they get hit often, don't they? And when they get hit, they're very accurate. So we need to see the battles that are all along the way in the territories when they happen. Again, none of these on the board, but that is above here. We're going to start looking to battle the flat here. We're going to be looking to battle there. We're going to be looking to battle here. And we're going to be looking to battle here. So once we break out of 6.82, I'm going to be looking for a mad dash to 8.51, and that's probably going to be a very negative point for the market. We may even wick above because we have wick match up here, so we're going to want to extend for that or watch for that. So I'll give you both of that as well. And normally I just like to extend the range, but I'm still going to just leave on the average. I think it's important. I will give you we will duplicate and fade away a line, or just make one as a dash line, and this is going to be the wick match. And that's good enough. So I'm going to call this a multi-touch flat dot wick match. Okay, and the number is, I'm going to give you the average because that's more accurate, 9.45. The high is 9.51, low 9.36. I'm giving you about 9.43. How about that? And that's approximately where those two match together. Okay, so we'll pay attention to these two areas, a wick up to there, very likely on the board. That's where you're probably going to see the market about to reverse and a bull run starting, if you can get it. So a bull run in that direction, powerful if we're there. We're not there. Again, I can project. We can project using our art several, sometimes years in advance. We had this number on our board for a long time, and we weren't even in play. And it took what? This is a weekly chart. Here's October 2023. We hit this in March of 2024. We've had a lot of these numbers on the board up here for a long time. Our old targets, I still leave them on so you guys can still see. It's all faded away. We hit it twice. So we can track. What matters is who's your opponent right now. Who's in play, what's in play, so you can see it. And you all have it, and I don't have to be here. Okay, if the worst comes to worst and everybody's panicking, you guys can go on our website, type in USDT.D and pull up this chart, this exact chart for this day. Otherwise, take a screenshot now, and recreate this map. The purpose is not to give you a fish to eat for a day, but to teach you how to fish. At the very least, teach you to plot map points that are important. All right, iPad says bearish for Bitcoin TC and other coins. This seemed to make sense. However, 1010 candles showed that the volatile market could have a big wick down, a higher candle close up for USDT.D. Okay, thank you, iPad. My analysis is not end all be all. This is just how I feel about the market based on the data I can observe. All right, so I'm going to be continuing to be bearish. Any other questions before I move on? The markets. All right. So I'm writing, I'm continuing to be bearish. The markets in general as USDT.D continues to be bullish. Okay, when that chart goes up, it means conservative action. Also, I think this is a great time to add this small commentary. You guys know I discussed last week about the SNAP EBT food benefits and the imprint that it causes on the market psychology. Every now and then in life, there are important factors that are external from the market, things that are more economic or more news in nature. News in itself is often temporary and the market shows a reflection, but other things itself are so impactful that they will cause an imprint on the market that will make a very important mark for the charts. For example, this snap a world war announcement starts making people sentiment and fearful and causes impressions, it causes emotions to go off in the market. It causes a change and how the tide of the future will change. So some of the things we're seeing right now won't exactly or immediately be reflected immediately, but they start overall. For example, the rumors of the insolvency of MEXC, the people, Christina Kelly's dream about MEXC over a year ago, that leaves a small impression on people. People are saying, hey, maybe there are rumors or not, and MEXC is saying everything's fine, but we're like, wait a minute. Something happened in the past with, I think it was FTX exchange and a few other exchanges that have closed their door overnight, and they would find their CEOs in Tahiti somewhere, lying on a beach with millions of dollars of their investors' money. People who have been burned in the past now have an impression that's left on them that they don't that will affect certain areas of trading in a mine, but also affect certain behaviors in life. So if I see the similar things happening for HTX, for those exchanges, was it FTX, HTX? A few of the exchanges that went down, CoinTiger, some of them that have the similar behavior, and somebody says, hey, they're showing evidence that there's insolvency. It may be fake, maybe true, but Christina Kelly's a member of our community, and she had a dream over a year ago, and something's not right, and I don't trust it. So I'm like, I'm gone. I'm done. I don't like risk. If there's a trade I'm in and the risk is too much, Even if I'm in a negative position, I don't have to be right. I don't have to play to my ego. Neither do you. It leaves an impression that says, I got to take action. Every now and then, something in life will happen in a relationship. Oh, I've been here before. Man, this is red flags. For me, this is red flag territory. It's not what I'm interested in. I need to get out of this relationship because this person's not going to be the marriage material. Okay? You're going to find that you're going to find yourself replaying to those emotions of warnings that went off from previous events in your life and take actions. This is actually why trend lines work. Because trend lines act like selling points and resistance of fly. When price comes to those same areas where things happened in the past, people say, oh, something happened, and their emotions trigger and market changes occur, good or bad. In the case of the economy, people were expecting that Trump would do something. Something will happen to the benefits. After November 1st, people start not eating by the tune of 40 million when it comes to the food stamp situation. There's about 44 million, I think they said. They also said there's fraud and everything. I'm not making a case for that. I'm just telling you what I see in the data. Because the benefits have lapsed on November 1st, and some courts are ordering something be done, it's leaving an impression on the economy. People are saying, oh, I better save my money because I'm unsure about the future. Some people say, oh, I'm not going to trade right now because I'm unsure about the future. And then when it happens in mass to the tune of millions, then it leaves an imprint on the economy in this area. It makes it harder for prices to go up because now investors in mass are not putting money in the markets. They don't have the retail to help spur along the bullish moves. It becomes much expensive, very expensive to try to drive prices higher when retail is out. And retail is dictated by the masses. You're saying not everybody feels that way, Jason. You're absolutely right. Not everybody feels that way. What you're looking for is the consensus. The real price is somewhere within the flow, isn't it? That's why gesture's so powerful. The real sentiment of a market is not in the extremes, the ups or downs. It's in the flow. It's in the average. It's in what we know as what I call the oscillation. Okay, the oscillation, price moving back and forth between two main points. If you can find the median oscillation, you got most of what you really need to know in the market. And when the median oscillation is broken, then something new happens in the market, doesn't it? We know this all the time. We can track when prices are entering weakness, even if they're going the wrong way. We can say, hey, overall, we should be still going down in this unless there's enough reason for us to go and make a reversal at this point. And this is why we examine those weaknesses and breakouts and breakdowns. Some changes in the economy as dictated or shown in the news are points of no return. And I believe that after November 1st, it was an important moment. Everybody's like, is the things going to get better? They're going to get better because that's what always happens in the market for the government shutdowns. Oh, the government shutdown? But it'll come back in 3 more weeks. But there comes a point when things don't change and it starts leaving impressions in the market. Oh, it's just a pullback. Oh, everything's going to be okay. But then comes a point when we cross over certain borders where we leave the median average, and now those old borders become new resistances at sword cuts. The old resistance becomes a resistance itself. The old support becomes resistance. People were very optimistic until here. Then they stop being optimistic. If things go back up, it's going to be temporarily. Do you understand? Until new bottoms are formed. And the up move can resume, which is the bad things. Or if there's reasons in the volume, as we often check, reasons to trade to the downside. In this case, there's still reason to trade to the downside. So I'm still very bullish. The market, based on these 3 points, increase in volume, 1, 2, 3. Do you guys see all of that? Because there's still so much supply at this area, I'm really optimistic that we are going to be hitting here sometime in the future. But not now. Not now at all. Right now, we're still in this upper territory, and these issues that are more pertinent and at hand are on play and need to be dealt with. This is going to be my full assertion on how I feel about the markets.